So I would love to hear Mateus, who can start a little bit about talking about the business in the US, and maybe talk a little bit about the challenges and how was for him to start a business in the US, and we can after that go through comments and maybe also hear some for the questions of the audience. Mateus, the floor is yours. Sorry for my problem here in connection.
Sure. Hi, everyone. My name is Mateus, of course, and I am one of the partners at Lobo, which is an animation production company that started in São Paulo and then expanded to the US and globally, but we have an office in New York currently. That office started in 2003 initially, and we were there until 2009 roughly, or 10, and then we restarted it in 2016, and it's running till now. I think, one of the main reasons we wanted to start the business was to be able to better navigate the rough times in the economy in Brazil or in the US, and like global economy. So when the economy here in Brazil was not doing so well, hopefully it was better in other places. When it was strong here, it wasn't so strong in other places. And that's exactly what happened. So that's the reason we ended up closing the office in 2010 after the Lehman Brothers crisis. It was very hard for us to keep the presence in the US. And then, when the Brazilian economy started not doing so well again, we decided to invest in the US market once more. I think, the biggest challenge, one of the biggest challenges, and I think one of the main reasons for the relative success that we've been having there was to find the right partner to start the business with. And in our case was someone, our EP and partner in the US market is someone that was familiar and built his entire career in that market. Even though he's Brazilian, he moved to the US when he was 18. It's 54 now. So he built his entire career in that market, has a deep knowledge of how it works and clients and all that. So I think that was, very instrumental in making and just making everything work for us. What else?
Maybe other questions, the tax or corporate structure.
Yeah, I think the other thing that we discussed, that there are a few different ways that we could set up the business, the company, and how that company relates to the company in Brazil. I think the way we decided to do it, and because we work mainly with animation, is that we set up an entirely separate company in the US, and that company hires our company in Brazil to work on whatever production we got hired to do in the US, and then the company in the US sends the money to Brazil, and that way we avoid It's just a smarter way in terms of taxes, and both in Brazil, because we pay less taxes, oddly enough, when we're receiving money from a US company, we pay less taxes than when we're receiving money from a Brazilian company. So if we're receiving money from an advertising agency in Brazil, we pay more taxes than if we're receiving from our company in the US. And on the other hand, if we keep the profit low in the US company by sending most of the money that we get in that company in the US, we just don't pay a lot of corporate taxes there. So it's just the best way to operate in that sense.
And also, what do you think that are the biggest difference between, let's say, doing business in Brazil and the US? So how are the challenges that you face? You mentioned like the right partner, but like to sell services. So how difficult it is?
Yeah, I guess, one of the biggest differences, at least for advertising production, is everything runs through the reps, the sales reps. And that doesn't exist in the Brazilian market. So that was something that we struggled with in the beginning with quite a bit as well, because basically, if you're part of a top reps roster, that says a lot about your company to the ad agencies, and the reps all have their rosters quite full, or and for if you have if you're trying to get in one of the rosters and there's a competing company, they will do everything to try to block you on that roster, so you don't compete within that wrapping company. So it took us probably, I think, 3 years in the East, and also it's separated by like East Coast, West Coast, and Midwest, and what was Hispanic market is now called a multicultural market. So for each one of those markets, you have a different sales rep. In the East Coast, which is probably the biggest market for advertising, it took us 3 to 4 years to get on a very good reps roster, and it made all the difference in the world. Like we saw like a 300% increase in sales and much better creative quality, just by being on that kind of the kind of creative that we started seeing just by being part of that roster changed dramatically. So and that's something that really doesn't exist at all in the Brazilian market. Each production company does its own sales, as opposed to the way the whole thing works in the US.
And do you think that one of the characteristics about you, like open a business in the US, is this exchange rate? So services, when you offer, let's say, Brazilian or work done in Brazil or something like that, this is have more appeal because of the exchange rate, or how was that? Because you didn't start now, you started many years ago. So how was that in the time being?
Yeah. It doesn't make that much of a difference in terms of having more appeal to the clients or the agencies, because usually that's another thing that, Brazil is becoming a little bit more like that, but it didn't used to be like that, where the bidding process, the budgets are set before you start, so everybody has the same budget to work with. So it doesn't really matter if I'm $300,000 are going to be $300,000 for all the bidders. I maybe will have a bigger profit with that because I'm dealing with a better exchange rate, but it won't give me an advantage to the competition, because it's the same. Everybody's working with the same budget, the same parameters. So, and like you said, when we started, we dealt with a number of different exchange rates through the years when the dollar was stronger, weaker compared to the real. But right now it's pretty good. A year ago was even better, but 5 years ago it was 3 something. So that's not really like the biggest reason. That
No, but this is really clarified for us. Maybe the common sense. And how did you structure? Did you have a LLC in the US, or what structure did you have?
It is a incorporated. I think it's called a Boudin Noir. It's not called Lobo, but it's a different name, DBA Lobo. So it's an incorporated. I don't know. That's not really my field of expertise, so I don't know why it was decided that way. But it's not a LLC.
Yeah, but we can. This is maybe a good excuse to jump to Brent, and maybe Brent can share with us a little bit about. And Brent, by the way, has been working with some Brazilian companies that are opening subsidiaries in the US. So. And he's familiar with these structures that are being set up. So maybe he can talk a little bit for us, and maybe we are open for questions someone here in the panel have as well. So go ahead, Brent.
Thanks. I'd be happy to. Hi, everyone. My name is Brent Bradley. I'm a partner at Cypress LLP. We're a boutique law firm based in Los Angeles. And my work is all in corporate entities and finance and mergers and acquisitions. And over the years, having got to meet and know Fabio and some of his partners, I've had the chance to work with some Brazilian companies who wanted to establish operations in the US. And one of the first things that you have to answer when you're coming here is you have to choose what kind of an entity you're going to form, and also in the States you have to decide what state of the 50 United States you're going to form it in, because here in the US we don't have any national corporation. All corporations and all business entities are formed under a state law. So kind of the first, and Mateus touched on this a little bit when he talked about the relationship between his US operation and his Brazilian operation, where they've sort of they're distinct sister companies, and the way that and their relationship is really almost like a captive contracting relationship. You have a lot of flexibility of corporate forms in the States, and you have a lot of ability to enter into different kinds of contracts, and in order to pursue your the one fundamental thing that you have to make sure that you're defining is, where do I want the profit to go? And sometimes the Brazilian company will want, like it is in Mateus's cases, they will want to see most of the revenue and most of the profit back being recognized by the Brazilian company. That's one possibility. The other possibility, of course, is, and I've had this happen a lot, is that the owners of the Brazilian company want to have the money in the United States. They want to leave the money in the United States and spend the money in the United States, and they don't want to bring it back into Brazil. And typically the drivers of that, and Fabian will touch on this a little bit because that's his area, but the big driver of that is, where do we want the profit, both from a operations perspective, from a profit to owners perspective, and of course tax. Where do we want to pay tax on the profits of the company? Do we want to pay the tax in Brazil, or do we want to pay the tax in the US? So depending upon the answer to those questions, you're going to pick one of two kinds of entities in the United States. You're either going to become a corporation, a C corporation, or you're going to become a limited liability company. And all 50 states have flavors of both of those things. A corporation is roughly equivalent to how you would think of an SA in Brazil. It has shareholders. It has a very well-articulated, publicly filed corporate structure. The owners are shareholders. They elect directors. The directors have to meet and be the governing body of the company, and the directors will then appoint formally officers whose job it is to conduct the day-to-day operational business of the company. That said, a U.S. corporation is not like an SA in that it's very flexible in terms of the kinds of internal governing documents it can have for the way that the shareholders and the way that the directors and officers will operate the company. So it's less formalistic than you might be used to. The other entity is an LLC. And the most important thing to remember, another important thing to remember about the C Corp is it's its own taxpayer. It has to pay taxes. It files a tax return and pays the taxes on its profits. And then to the extent that it then later distributes those profits to its owner, that's a whole other taxable event. An LLC here is like a limitada. It has a very flexible structure in that you basically can have what's called an operating agreement, which governs how the LLC works. And you can have an infinite variation in an operating agreement about who controls governance, who makes business decisions, who can and can't vote for things, who has to put money in, who gets to take money out. You can slice and dice the revenue and the profit in a infinite variety of ways. So it's a very flexible, very easy to run and control type of entity. And then of course, one of the key things about an LLC is it doesn't get taxed. It passes through its tax attributes to its owners. And so when you think about So the biggest drivers of these things are, one, flexibility of governance, LLC super flexible. Two, investment strategy. Does the company require investors? And if it's going to have investors, what do those investors want? If those investors want to receive tax efficient distributions of cash flow, they're going to want to invest in an LLC. If what those investors seek is capital growth, they want to put their investment in alongside the Brazilian company, grow the company, sell the company, then it's going to be a corporation, right? Because it's the company is looking at taking its after-tax dollars and not distributing them to the owners, but keeping them inside of the system. And the owners don't want to have to report profit on those earnings that are going into capital growth and being kept inside of the company. So those are sort of the options that you have when you're looking at what kind of an entity to form in the U.S.
This is very good. What I'm seeing also, Brent, is several, let's say, Brazilian entrepreneurs and Brazilian companies. They look to establish the main company in the U.S. and the subsidiary in Brazil. It's owned by the U.S. Company, and they use that because the way that you raise money in the U.S. from family and friends, from the Series A, like for family offices and things like that, there is much more alternatives. There's a lot of companies in the Silicon Valley, in Los Angeles, that are able to make those investments. So can you share a little bit about this how someone can think in a business that can raise money in the US. So like startups, and if they have like something really smart that they want to establish in the US.
Sure. I mean, the startup environment here is obviously a very good one. It's got a lot of, it's followed over the years sort of the Silicon Valley model, where investors and founders of companies have done a lot of work to make the investment process as sort of regularized as possible. So you'll have large organizations like the National Venture Capital Association and some of the Silicon Valley law firms and founders organizations and angel organizations that are affiliated with those law firms have developed a lot of standardized forms for early stage investments and for capital formation from the US companies. And that's a way to sort of try to make it as to reduce the number of speed bumps to capital. And so you don't have to spend, in the old days, you had to spend hours and hours and days and months negotiating the form of the investment, right? Who's going to want to do that and spend $50,000 on lawyers to do this if all you're trying to do is raise $500,000 of seed money for your project? It's ridiculous as a transaction cost. And so there's very well developed here a kind of a standardized set of industry approved documents for the first 2 to 3 steps or stages in capital raising, so that you take all of that friction and all of that legal noise kind of out of the process and make it much easier to work. And so, for example, you can do a startup here. Like if you were to come to our firm, it would cost you maybe, and by the way, all of those investments are being done in C corporations, because the seed investors, the venture capitalists that do those early rounds, they're investing in capital appreciation. They're not investing for cash flow. So they want their money to go into that company, get parked, used, and then eventually unlock their return on their investment with an exit, with a liquidity event like an IPO or the sale of the mature business to another. So and this also brings up the fact that companies in the US are very fast, easy, and cheap to form relative to Brazil or virtually any place else. So if you were to come to Cyprus and say, we want to put up a US startup, we're going to go raise money with it, we could put up the company for $4,000, something like that. It would take a short number of weeks and it would be totally up. And then if we were going to go to the market and look to raise capital using some of these more institutional resources that we have here, seed investing groups, angel investing groups, there's all kinds of organizations that are sort of places where folks go to make these investments and learn about investments. We could probably do a capital raise using those very standardized forms here for $8,000, $10,000, maybe $12,000 US. And you could be raising anywhere from $500,000 to $5 million in kind of an early stage raise for that kind of a legal burn. So it's really very, so for roughly the amount of money that in a lot of countries you could just form an entity, here you could actually get the entity formed and have gone through its capital raising activities.
This is really good, and I hope encourage some of our audience try to do this structure, because I think the market in the US is much more mature than the market in Brazil. So, and when you find a qualified investor in Brazil, many times they ask to do the investment in the US because they have already money in the US or their structure in the US. So it's really good for Brazilians that are thinking like bigger, do this structure this way. And maybe you can jump so you can keep the conversation going to Fabian, and maybe Fabian can talk a little bit for us about the tax event. So Fabian also has been helping businesses between Brazil and the US, so he's familiar with both tax scenarios. So maybe he can give some advice about best structure in terms of taxes.
Yeah, sure. Thank you, Fabio. First of all, thank you for having me. My name is Fabian Munoz. I'm the owner of Munoz Financial Group, and we deal with business entities and individuals that are doing business in the U.S. From foreign individuals, foreign companies that are entering into the U.S. market, or U.S. companies that are also trying to go outside of the U.S. market. Now, what Brent was talking about was setting up your company here in the U.S. You gave the two examples of the corporation and the LLC, and the big question that you would have to answer would be, where do you want the profits, right? Do you want them in the U.S.? Do you want them in Brazil or wherever you are? And that's a really big question. That's a really big question, because that is going to have a lot of the tax ramifications. So Brent mentioned about the C corporation, how the C corporation is its own individual tax entity. And so he was talking about how, using that as a vehicle for capital growth, and that's something that in terms of your tax scenario, you want your earnings, you want the retained earnings and all of that to sit in that entity, because you get taxed at that entity level. We'll kind of walk through it a little bit. The other scenario was the LLC, and it's to distribute the earnings, and essentially you distribute the taxes in and amongst the individual owners of that LLC. And it doesn't matter if that individual owner is a U.S. person or not a U.S. person, and we'll kind of walk through the differences there as well. So the big thing to start off with is that there's so when we're talking about income, we're talking about the money that comes in, right? Well, there's two big differences between gross income and net income. Now, in a lot of countries, and I believe there are some tax regimes in Brazil that tax you on your gross income. Now, gross income means receipts. That's the money that you make off the top. Net income is your profit after expenses, your lucro líquido. So your receipts come in, and then you have expenses after that. Here in the U.S., most every tax that exists is based on net income after expenses. So the U.S. allows a lot more of these expenses that are related to business to reduce those initial receipts before either the company or the individuals get taxed. So that's an important point. And so it's very, very important for companies, for individuals who are doing business in the US to keep meticulous track of anything and everything that could potentially be an expense. You don't want to have to pay taxes on that which you wouldn't really need to. So the a couple of the tax regimes for us, the C corporation, it gets taxed on. We're on a calendar year basis. So any kind of income, profit that you have in that calendar year, you pay tax on that profit. For the C corporation that we set up, the one that is mainly for capital growth, that essentially you want to kind of keep your profits within that entity. There's two types of taxes on it. There's the initial tax on the profit at the end of the year, and then if you ever distribute any of that profit, there are dividends, and those dividends that get taxed to the owners that receive those distributions. Now, if that owner is not a US person, let's say they're a Brazilian person, they're a foreign person, they still have to pay that tax. Now, the way it works is that there's tax withholding requirements on those distributions, and that tax withholding requirement at this point is about 30%. So any kind of income that's distributed out to the owners get an additional tax on top of the profit of 30%. The other route, the other entity was LLC. So the LLC you have the income during the calendar year, and then that income is basically distributed amongst the owners. Once again, it doesn't really matter if you're a US person or not a US person, but you essentially have to report and pay tax on those earnings, that share of earnings that you have. Now the rates on those are a little different because you're getting taxed as an individual compared to as an entity. But the biggest difference between the two, if you're a foreign person, is that if you are not actually present in the US and you're an owner of a C corporation, you don't have to file an individual tax return. As long as the entity files a tax return, then you don't have a separate tax filing requirement. If you are the owner of an LLC and you're a non-US person and you're not present in the US, you have to file a tax return, and that could include a lot more than you may have bargained for, but it's something that should definitely enter into the equation of what entity you end up choosing. Now, a couple other things to discuss. Let's say we've already mentioned foreign person, US person. What does that mean? So foreign person, basically a non-resident of the US. And being a non-resident of the US means that, let's say in one given year, you are not living in the US for, or you're within the US for less than 6 months. So if you're in the US for less than 6 months, then more often than not, you're going to be a non-resident. Okay, so that's scenario number one, non-resident. Scenario number two, resident. So you pass those 6 months. Well, guess what? Even if you have a visa to work in the US or not, or whatever it is, if you're in the US for that amount of time, you are now a US tax resident. It doesn't have anything to do with immigration. It doesn't have anything to do with it. It just has to do with taxes. If you're here in the US for over 6 months, you become a resident. And then there's an additional equation that the tax regime, the IRS, has here in the U.S. to determine. They throw another curveball and they say it's called the financial presence test. And essentially, what it is it takes the same or the number of days you're in the U.S. for year one. And then they include a third of the number of days that you were in the US in the year before year one. And then they take a sixth of the number of days that you were in the US in 2 years before year one. So it kind of gets a little complicated, but to keep things simple, we have some clients that want to remain non-residents, and we'll kind of walk through why. But essentially what we tell them is, if you want to remain a non-resident, want to spend time in the US every year, but want to stay under that threshold, then that threshold is 120 days. If you stay in the US for 120 days or less every year, you will never pass that threshold to become a resident. Now, why don't you want to become a resident? So the U.S. is one of the only entities that taxes its U.S. people, it's basically its citizens and residents, on their worldwide income. All right. So if you're a U.S. person, if you're essentially, let's make it simple. If you're a U.S. citizen, it doesn't matter where you're living. You could be living in Brazil, you could be living in Southeast Asia, you could be living on the moon. You're going to be paying tax in the US on 100% of your worldwide income. So that's for US citizens. Now, what's the difference between a US citizen and a US person? For taxes, nothing, absolutely nothing. So what you wanted, so essentially, as soon as you cross that threshold of either the 6 months or you pass that financial presence test that we talked about, then you become a US tax person and you get taxed on 100% of your worldwide income here in the US. So a lot of people try to avoid that as much as possible. If you can't avoid that, then that's no problem, because we can definitely kind of help you out with what goes into that. Now, there are a few things to keep in mind if you are going to become a U.S. tax person. And number one, that means that there are, aside from getting taxed and reporting 100% of your income, there are other disclosures that you have to make to the IRS. Now, those disclosures include whether you are an owner of any foreign entity. If you own 10% or more of any foreign entity, you have to report that. And you have to report kind of the activity, the overall business activity of that entity. You have to report that here in the US. Additionally, if you have any bank accounts or securities accounts, any kind of investment accounts that are over what's equivalent to US $10,000, so let's say in Brazil last year, we'll round 50,000 reais, you have to report that here in the US. You don't necessarily pay tax on that. Well, you don't pay tax on that, but you have to report it. Now, failing to report those two things, those disclosures, whether you have a company or you own a company greater than 10%, or you forget to disclose a bank account, there are massive penalties that you don't want to have to deal with. So it's very important that if you are planning on doing business over here, to have that in mind and to make sure you're organized when you do start filing over here. the other thing, let's say you do become a U.S. tax person. A large question that we get is the double taxation, bitributação. So, would I pay double the tax here in the U.S. on tax or on income that I've already been taxed on in Brazil? The answer is yes and no. So the answer is yes, because you still have to report that. Let's say you have earnings in Brazil and you pay tax on those earnings. You have to report those earnings here in the US. And the reason why it's no is, let's say, we'll give you an example. You make $100 in Brazil and you pay 20% taxes on that. So you pay $2 or you pay $20 on that $100 that you made in Brazil. You report that $100 here in the US. Now, let's say that the US tax rates are a bit higher than Brazil and it's 30%. So now here in the US, you owe $30 on that 100 that you made. Well, you don't have to pay the $30. You pay the $30 minus the 20 that you already paid. So it's called the foreign tax credit. You kind of you're able to avoid having to pay that double taxation because you are able to pick up any tax that you already paid as a credit on the taxes that you owe here in the US. Now, the good thing about not becoming a US tax person, if you don't need to, is when you are filing your taxes here in the US on earnings that you had in the US, that's all you have to report. All you have to report in the US as a non-resident is any earnings that you had in the US during that calendar year. So something to definitely keep in mind. And then one of the last thing that I'll mention are the tax rates. That's one of the questions that we get the most is, what are my tax rates? And unfortunately, that's not an easy question, because what happens here in the US is that we have a graduated tax system. So as soon as, so let's say for the first $10,000, you are taxed at a rate of 10%. From $10,000 to $20,000, you're taxed at 15%. From $20,000 to $80,000, you're taxed at 18%. And it just keeps kind of going up in a graduated rate. The highest tax percentage that we have over here is about 37%. The lowest is about 10%. Now, we're only talking about the federal rate. So that means that if you're here in the US and you're present in the US, you also probably have to pay a state tax rate. And every state tax regime is completely different to the other state tax regimes. So not a very simple question to say yes or no. There's another tax to be aware of, especially for those that are setting up an LLC, called the self-employment tax. And that's basically to cover the US kind of the social programs that we have, the Social Security, Medicare, those kinds of things. It's about 15% of your net income. So that's after the taxes, and that's on top of the regular tax rates. So got to keep that in mind. That one can be a killer sometimes if you're not ready for it, or if you haven't planned for it. So a couple of things that you need to keep in mind in terms of the taxes if you're going to become a resident here in the US for taxes, or you're going to be a non-resident. So hopefully I haven't been talking for too long. I haven't rambled on for too long, but I'll give it back to Fabio, and wondering if you have any questions, if the people have any questions.
No, it's really clear, Fabian, and I always love to hear you and Brent, because it's really dry subject that you are speaking of, taxes and forming companies and things like that. And I think you both speak in a fun way, so it's not boring to to listen these things, and it's really exciting because it's clear in my point of view. Maybe I'll turn to Mateus. So Mateus, since you open a business and after hear a little bit Fabian and Brent, I hope that maybe have like questions that you could ask to them. I don't know, and we can have a little interaction between you guys.
No, I have loads of questions, but I probably have to pay for them because I am actually moving.
Use
their free time at least for a couple of minutes, so we can have some of that answer.
We are moving to the US in the very near future. We'll just finish the entire, and this I think goes for everyone that maybe have the intention of moving. I think if all the tax wasn't this encouragement enough, the visa process is even more. The amount of bureaucracy and like red tape you have to go through puts the Brazilian red tape to shame. It's just crazy. It took me better part of a year to get everything in order to get an O1 visa. No, it's just of course there are benefits.
For that also we have Flavia. I don't know if you work with her, but Flavia Lloyd worked a lot with all of us here, and she's great. So she's also based in California.
But yeah, I think those are doubts that every one in Brazil that is thinking about moving to the US has about what you just explained about the tax, the tributação, like that you don't have to pay everything twice, that you just pay the difference on the rates. So that's a good thing. Of course, there are ways, all very much within the law, that you can be smart about, like you said, maybe not spend the full 6 months and to avoid, at least in for the year that you're moving, you choose to move at a certain time of the year to avoid on that year to be a taxpayer in the US on that year. So that's what I'm planning to do, at least. So it's moving in August. So for this year, at least.
Very good.
But yeah, I think those are all like very useful information for anyone thinking about making that move.
Now, Mateus, I have a quick question for you. I know that your company is set up in Brazil, and you have a company in the US as well. That company is not necessarily your subsidiary, correct?
No,
Okay.
They're not affiliated in any way.
Gotcha. And then that company that you have in the US, what is the relationship that you have with Brazil? Like, do they act how are they acting for you?
In what sense? I mean, the company.
Like, how do they help you as a business? Like, what do they perform for you as a business? Like, what?
For the company,
Brazil is a service provider for you in the US, no? The Brazilian company.
Yes, exactly. Like the US company hires the Brazilian company to provide services. So the US company gets hired usually by an advertising agency to deliver a commercial. And then the US company hires the Brazilian company to produce that commercial. And the Brazilian company has the animators, the computers, and then we just send the finished commercial to the US company. The US company generates the copies or the QuickTimes or what, and delivers that to the agency. That's kind of a simplified version of how it works.
Gotcha. Okay. So most of the production for that, for your or essentially all of the production is taking place in Brazil.
Yeah, it's not all of it because we're growing the US side of things, but
Gotcha.
it started like that, and it's like 80% of the production is done in Brazil now, something like that.
Okay.
Yeah, I mean, it's
one of the things that I've seen is that there's taxes. Correct me if I'm wrong, but there's taxes in Brazil for paying contractors outside of Brazil, or just paying third parties outside of Brazil.
Yeah.
So
yeah,
in the US,
sorry,
we don't necessarily have that. Whether we're paying people internationally or in the US. Have you seen that, and have you been able to take advantage of that?
Yes, definitely. So in Brazil, if I want to hire a freelancer in anywhere in the world, which we do a lot, let's say in Spain. So there's this great 3D animator in Spain that we want to hire. If I have to send the money to pay his fees, like for a week, let's say 5,000 euros, there's like a 40% tax on top of the 5,000 euros to send that money from Brazil to Spain, and from the US there's zero. So it's very easy to circulate money, as you know very well, like from the US to anywhere in the world. So we do that a lot as well. So we keep money there in the US to be able to pay vendors for shoots that we need to do in different parts of the world, for freelancers, for any kind of expenses that we need to pay in different parts of the world.
Yeah, I mean, that's one of the things that circling back to that structure, you have other ways, and going back to what Fabian was talking about the fact that expenses reduce your taxes in the States, right? And they don't elsewhere. There's other ways to get, and profit dividends are subject to withholding in the States. There's other ways to get money out of the States into Brazil, out of Brazil into the States, right? You can pay royalties for IP. You can enter into services arrangements. And those two things, especially royalties on IP and payments for services, are ways that you can get pretty precise about locating where you want those services to be, how much you want to be paid for them, as a tool for getting your profit in the right country and lowering your taxes in both countries, as another way of sort of as part of your structure about how the money is going to go back and forth between these two either related by ownership or related by interest, Brazilian and US companies that are sort of being run together in a sense, even if one is not an owner of the other.
This is very good. There is any final thoughts or consideration that you want to share with us? So, Mateus, Brent, or Fabian? Think, go ahead.
No, I was going to say maybe we can open to questions from anybody.
Yeah, what we have is somebody has a question, please feel free to ask. So I think it's really good to have Mateus here as a good example of someone that succeeded really well in the United States and a company that everybody knows in Brazil. And Fabian and Brent, I rely on them because I think they are both. Cypress is one of the most prestigious boutique firm in the US, and they really assist several Brazilian business established in the US, and also Fabian knows really well how to handle taxes between these two territories. Sometimes it's hard for lawyers or CPAs, even good ones in the US, but they don't know the outside jurisdiction. It's hard to make this interaction. I think they know really well how to do that, and I think they are good providers to work any production house or any business in Brazil that are looking for expansion to the US. So we have here someone with a question, and while, let's say, Mateus can ask his question, we can receive, let's say, some others someone have for Brent or Fabian. If not, after Mateus finish his answer, we can finish our section. I know that we have a little outage in my side here in the beginning, but I want to respect everybody's time. So, Mateus, I don't know if you have the question direct, so go ahead and answer.
Yeah, there's a question here about how the representation works. That they have a roster of directors and companies, and yeah, that's exactly how it works. That's from Fernando from Spirit Animation. That's a really cool company here from Brazil. So yeah, Fernando, that's how it works. Each rapping company, in our case, is a company called Hustle, and they have a roster of directors and animation companies, and they don't take 30%. Thank God, no, they take something around 8% of the budgets. That's basically how it works. You know, they usually get the scripts from the agencies, and they send the scripts to us, and we eventually pitch on the jobs. And if we win, they get 8%, around 8% commission on the jobs that we win. And we have an exclusivity contract with them for that region. So in the East Coast, that's Hustle, it for whenever we work direct to clients. So for example, Google, Facebook, Apple, and those kinds of companies, we have a different agreement, but that usually it doesn't go through the reps. But for ad agencies, it's exactly like that. If you have any other questions, you can reach out directly. You have my email.
Well, this is very good. I also asked to Renata put in the along with the video, so the email of everybody, so they can reach directly if they have any questions. So it's really good. In the name of APRO and CQSFV Law Firm, I'd like to thank you, everybody, to being here. Sorry for the technical issues, but we are, I think we had really great panel, was a great content. A lot of people watch now live in YouTube, and a lot of people watch later in our page at the YouTube and also in the APRO's webpage. Thanks for all. Have a good afternoon to Mateus, that's in São Paulo, and Fabian and Brent. Have a good afternoon.
Yeah, likewise. Fabio,
guys.
thank you for having me. You guys can find me at mfgtaxes.com, Munoz Financial Group, MFG Taxes, or you find me on LinkedIn. You can message me directly, or the emails that Fabio will circulate.
Great.
Very good.
Right.
Thank
Thanks
you very
a lot,
much.
guys.
Everyone.
Bye-bye. Have a great day.
Cheers.
Bye-bye.
Bye.
Thank you.